Yahoo Finance, 1st of March 2024, global manufacturers struggle for expansion as Chinese demand remains stagnant. China faces a significant demographic challenge and is ensnared in the middle-income trap, characterized by declining property prices and failing to meet public expectations. In February, it was difficult for factories worldwide to emerge from a decline, with European powerhouse Germany being hit harder by a steeper drop in demand and indications of improvement in Asia being obscured by an uneven recovery in China. According to a multitude of business surveys released on Friday, the conclusion of the first quarter was marked by inconsistent performance in Europe and Asia. Amid sluggish demand, manufacturing activity declined throughout the Eurozone last month, despite firms' optimism regarding the coming year. S&P Global's final Eurozone factory PMI for Hub decreased to 46.5 in February from 46.6 in January, surpassing a preliminary estimate of 46.1 but remaining below the 50-point threshold that distinguishes expansionary from contractionary activity for the 20th consecutive month. The PMI survey revealed that the region's raw materials costs decreased at a slower rate, primarily due to commodity price fluctuations rather than disruptions in the Red Sea. However, official data indicated that prices increased marginally more than anticipated in February. It is widely anticipated that European Central Bank policymakers will postpone any interest rate reductions until June as they persist in their endeavor to restore inflation to the targeted 2% level. Germany, Europe's largest economy, experienced a more severe manufacturing contraction in February due to a more rapid decline in output and new orders. The sector in Italy experienced its 11th consecutive month of contraction, albeit with indications of improvement. Conversely, the decline in France moderated. As domestic demand improved, factory activity in Spain increased for the first time in nearly a year, resulting in an outperformance. Outside the European Union, the United Kingdom experienced a year of declining output despite an increase in its PMI. According to Boudewijn Driedancks of the consulting firm McKinsey & Company, the manufacturing sector's recovery remains sluggish, according to today's UK PMI and Eurozone data. A growing disparity in manufacturing activity is observed throughout the Eurozone. This starkly contrasts with the previous year, when international trends followed a more consistent trajectory. A composite bag. The private sector Caixin PMI detected a marginal increase in factory activity, whereas the official PMI released by the Chinese government indicated that factory activity was further declining. Concerningly, recent data indicates Japan's weakness in the latter part of the previous year, thereby complicating the Bank of Japan's efforts to wean itself from ultra-easy monetary policy. According to Yuzo Mabadi of S&P Global Market Intelligence, February PMI data revealed that operating conditions in the Japanese manufacturing sector continued to deteriorate for another month. The sector continued to be burdened by depressed demand on domestic and international markets, as production and new orders declined at the fastest rate in a year. Unexpectedly, Japan entered a recession in the fourth quarter, and as business and consumer spending weakened, it surrendered its position as the world's third-largest economy to Germany. Its PMI followed this week's official Japanese data, which indicated the most rapid decline in factory output since May 2020. Indicators suggest that the world's second-largest economy is beginning to regain its footing following a severe downturn precipitated by a property sector crisis, despite China's inconsistent performance. Investors are anticipating next week's annual meeting of the Chinese parliament, during which policymakers will be urged to take further action to stimulate the economy. However, there were indications that circumstances were improving in other regions of Asia. In February, export growth in South Korea surpassed expectations, and manufacturing activity expanded at the quickest rate in 5 months, according to India's PMI. That followed data released on Thursday indicating that India's economy experienced its most rapid expansion in 15 years during the final 3 months of 2023. Conversely, the principal manufacturing economies of Southeast Asia exhibited predominantly positive growth, as indicated by PMIs in Vietnam, Indonesia, and the Philippines, which all suggest activity expansion. However, Malaysian and Thai PMIs consistently reported activity declines.